Welcome everyone to another one-to-one mining investment virtual content session. Today we're focusing on the important topic of ESG, which has become one of the defining issues for investors and asset owners across all industries. And we certainly will be a driving force for the mining industry over the next decade. Today I'm delighted to be joined by a fantastic lineup of investment and mining industry stakeholders who will be helping us to develop a better understanding of the risks and opportunities facing all stakeholders when it comes to ESG. So I'd like to welcome then our esteemed panel of speakers, Mr. Alan Knight, General Manager for Sustainable Development and Corporate Responsibility at ArcelorMittal, Adam Matthews, who is Director of Ethics and Engagement for the Church of England Pension Board, as well as Co-Chair of the Transition Pathway Initiative, Jessica Fung, VP of Investments at Parlour Investments, John Samuel, Group Head of Responsible Business Partnerships at Anglo American, and Kieran Land, Partner in Public Law and the Regulations team at Gowling WLG. And with that, I'm pleased to hand over to our host anchor, Carol Cable, Partner at Brunswick Group, to lead us through today. So Carol, thank you, and over to you.
Thank you, Adam, and welcome to all my panel members. I would like to start off the session looking at ESG in a COVID-19 world. We've obviously, our mining companies and investors are dealing with or everybody is dealing with this global pandemic. And I'd like to turn to Adam Matthews just to get Adam to get your view on, we're temporarily seeing a move from the E to the S right now for obvious reasons in the COVID-19 world that we currently find ourselves in. Do you think that it is temporary, and do you think that the emphasis for investors will go back onto the E part of ESG soon?
Thanks, Carol, and good to be participating in the webinar. I mean, I don't think it's either or. I mean, for me, clearly, how companies responding to the COVID crisis is absolutely critical, particularly in this sort of immediate time and in terms of the recovery, and obviously wanting to have assurance from companies that they are putting in place strategies to manage the risks for their workforces and also the communities that they operate in. Likewise, how that plays into their supply chains, etc. All of that's incredibly important, and that does speak to the S in ESG. And obviously wanting to see good practice, and we've been very encouraged by some of that good practice. I think you've got a couple of companies here that we understand are doing things very actively in that space. But there's also poor practice, and I think it's important investors understand that and identify that and challenge it where they see it. But in terms of the I mean, environmental issues, I mean, it's not gone away. The lesson from the COVID-19 crisis is not to ignore the other major systemic threat to us, which is climate change. So my sense is that that hasn't gone away. And I think if you look at the oil and gas sector in Europe, you've seen a raft of major announcements from those companies related to climate commitments. And I think that those have been made during the COVID crisis. And that's indicative that they recognize that their strategies for recovery are intimately linked with how they address the other major systemic challenge of climate change.
Well, let's just turn to John Samuel. John, as a mining company, you're having to deal with the realities on the ground at your mine sites with this terrible pandemic that we're seeing across the world. Do you see, or do you take the same view as Adam, that it's not an either or? The focus on the E and the S is always equally important and will continue to be so.
Yeah, I agree. Yes, and the G as well, because I think good ESG management, fundamentally it's about good management of risks and opportunities, and and there are. Both of those sides of the equation need to be looked at well. So, I think it is striking. The FT, for example, has reported on a number of occasions that high-performing ESG firms are outperforming their sector peers in terms of share price at the moment. And I suspect that is to do with, good risk management. And, from our point of view, at the very local level, we're very much a part of the communities in which we operate, and if those communities aren't functioning, we can't function effectively, and vice versa. So, I think we are you know, we spent a lot of time looking at the sorts of systems we need on the environment, health, safety, community side of things. And, you know, those systems we put in place over the last few years, you know, over the last 10, 15 years, really have really stood us in good stead in terms of managing this pandemic, even though this particular challenge we're facing is obviously quite a unique one. We've never had one that's affected the whole world in this way before in our lifetimes. So, but I agree. I think, you know, ESG, different things become important at different times, but you need to be able to manage that whole suite of risks. And if you're not ready to manage any particular aspect of it, you can still come a cropper.
So I guess, Alan, is it short term versus long term? You know, we're dealing with a pandemic that's our current reality right now. But do you have to keep your eye on that long term risk, as John was talking about, and specifically for ArcelorMittal as a steel producer? The impact that to the environment is critical.
It's always a balance. You know, when you lead the sustainability function for a big company, your focus is the long term, and almost the rest of the business sort of runs the business, and we look at the long term trends. There's no reason why that should change because of COVID. And in fact, over time, the science will, you know, what were the underlying reasons behind COVID, and a lot of the conventional SD issues will be raised: loss of biodiversity, globalization. You know, all of those questions will have a new focus point because of pandemics. Short term, yeah, probably half of my working day at the moment is devoted to the short term challenges of such a pandemic. I'm on sort of loads of internal committees around the world on this. But that's fascinating because I'm drawing lessons to how this will impact on the more conventional job outside a pandemic. I think the biggest thing I'm seeing people now talk about, how will it impact on our agenda? Our agenda at the moment is a lot about sustainability. How do we respond to long-term trends? But I'm sure all of us on this call have seen the word resilience. Sort of, it was around before, but it's now got a new sort of resonance about it. And to what extent do things such as climate change, pollution, biodiversity, to what extent are they about long-term being ready for 9 billion people on a planet in 2050? Or to what extent are the same issues and the same science driving we need to look after biodiversity and keep our air clean, etc., also about short-term resilience? You know, will I be the head of resilience in 2 years' time, or resilience and sustainability? And I do hope that we take that questioning really seriously. Because the content is very similar. There's massive overlap. We need to look after the climate for sustainability, and we need to look after it for resilience. But I think resilience now is going to have a far higher sort of resonance, let's say, with our leadership than sustainability. And we can easily manage both. So it's not a threat, it's about adapting.
And it's a good point about the word resilience. You're right. It certainly is a word that has been bandied about during this current crisis, and rightly so. And we're seeing certainly seeing the miners respond accordingly. Jessica, you're in the enviable position of being an investor as well as an owner of mine. So I guess you can see both sides of the equation. And what's your view on the resilience that either your investments have seen or challenges that you've seen? I think you're on mute.
Sorry about that. Thanks, Carol. Yeah, I think resilience is important for any business, obviously, not just for mining. It's also important for our investment fund, because the last thing I think anybody wants when we think about our portfolio of assets is to have a stranded asset at the end of the day. And sustainability in terms of the mining assets that we do own is so important to us, because, you know, at some point as an investor, we do want to exit these positions, and we don't want to end up with stranded assets or assets that lose a lot of value because they are not resilient through cycles. There's a growing recognition that how important this is, and so that's why it is a focus for us. I'm going to leave it at that.
Okay, thank you. And Kieran, just turning to you before we sort of move on a little bit, just love to hear your views from, you know, your side of the fence, which is very much around that regulatory and that that legal framework.
Yes, I mean, I think different countries will be putting different laws in place to deal with this sort of thing. But just to take a step back from that, and just to take ESG in reverse order, I mean, I think that we're seeing very much that from a governance perspective, ESG management is absolutely seen as a proxy for good governance. So lots of investors and lots of other stakeholders will be looking at mining companies and looking at whether they're dealing with this crisis from an ESG perspective to see who has robust governance in place, and then drawing wider conclusions from that. I mean, on the ES, this is a really good opportunity, I think, for mining companies to come out of this with some really good stories to tell about the social value that they can bring. I mean, I know, for example, that the International Council on Mining and Metals is talking about some of the practical measures that have been taken by lots of companies to support local communities. Things like donations of PPE and sort of community field hospitals, making sure people have clean drinking water, educational programs. So I think the companies that are going to come out of this well will actually come out with some really strong ESG stories to tell. But I also do think that it is going to push environment a bit further up the agenda, possibly. We have seen over the past couple of weeks various climate benefits that have come from the crisis. And I think a lot of stakeholders are going to be really keen to try and hold on to the benefits that this has given rise to. So I think we might see the E sort of edging up the agenda even a bit further after this.
That's a good point. And just today we heard some news from India about, you know, their the CO2 emissions dropping like a stone over these past few months. Alan, what do you think about this? Because as a steel producer, do you feel like there's going to be more social pressure on you as a business to be reducing CO2 emissions even faster as a result of the pandemic actually producing cleaner air and cleaner water, and that perception and reality that that society is actually seeing?
I think on climate change, it's fair to say, as one of the largest carbon emitters in the world, that the pressure hasn't gone up or down, because the pressure was pretty intense before this started. The important thing, it's very clear now that there's no way this debate's going to go down. And trust me, some of my colleagues sort of said, well, look, with so many other priorities and with survival now, you know, one of the things we have to think about, maybe it will go down. And there's so much evidence that it won't go down. I think the debate's going to get more sophisticated, which is why I was talking about resilience earlier. So I think it will carry on growing, but I don't see it growing anything more because of how fast it was growing anyway. What I think it is interesting, in your question you talked about carbon, but then you threw in water and air pollution and quality of air. You know, these are big issues for a steelmaker too. And those issues existed even if carbon wasn't a problem. I think for us, it's going to be, what about the other issues? You know, people sort of say climate is the biggest issue. It is, but there are some other big issues as well, and they are challenging. They're technically complicated. They're expensive to resolve. And if you've seen, there's quite a lot of science which is showing about how quality of air and pollution, lung disease, COVID, you can see where that narrative can go. Mm-hmm. So it might be not so much will climate get any more intense, will some of the other environmental and social issues become as intense?
Yeah, totally agree with that. I think you're absolutely right, and it's a sort of question of, do we recover out of this in taking the best parts of what we've noticed and what we've seen as possible, and enabling that sort of transition to happen quicker? Are we also going to acknowledge that relationship between air pollution and sort of lungs? And I suppose the other thing is taxation, which clearly you're going to need very well funded health systems, and those countries that have got the best equipped health systems are the ones that have been able to respond perhaps more effectively. Now, it's early days, but the relationship with tax and society in that regard for companies and individuals is going to be a key aspect to this too. But for me, it's really, do we recover better, and are we able to ensure that we learn the lessons from this in terms of addressing the other systemic challenge, which picks up on many of the points also Alan's making.
And do we recover better? Do we recover quicker? John Samuel, is it possible to speed up the recovery? Mining companies are notoriously slow in adopting new technologies and innovation, but certainly Anglo-American has got very sophisticated partnerships and is doing a lot in that area. And you're on mute as well.
Yeah, so I mean, we're starting to turn to the recovery now. I mean, we sort of had a 3-phase response. One is prevention, and that's looking at things like the right operating protocols, but also making sure that host communities, for example, have water supplies. So we've increased the number of communities, households we're providing water to by hundreds of thousands over the epidemic, for example. And then there's been a response phase, which is around testing the workforce, keeping the workforce safe, but also providing a lot of support into those communities and building off a lot of the partnerships we'd already developed. So we're at about $27 million worth of committed spend at the moment in our host communities. And you can't really do that very easily unless you've got a good network of existing partnerships to work through. So to give you a couple of examples, in South Africa, we had a community health outreach program run for us by the University of Pretoria, and that sends sort of clinical assistance to host communities to do the basic diagnostic work so that people get referred to doctor's surgeries or hospitals if they need that. And that's what we've built a lot of our community response for COVID-19 off. So that they do have some clinical training. They're not as well trained as doctors, for example, but they are able to do basic diagnostic tests. So that is actually something we're rapidly scaling up off an existing partnership. And then more broadly around the group, we've been working with the London School of Hygiene and Tropical Medicine over the last 2 years to do community health baselines in all of our host communities worldwide, literally from Australia to Zimbabwe and all the other countries in between on the alphabet, in support of our health stretch goal and our sustainable mining plan, which is to help our host communities meet the SDG 3 targets for health. And again, that's been really useful because through that work, we actually have an enormous amount of knowledge of what the health priorities are. Is it water and sanitation, or is it actually advanced diagnostic equipment? And different locations have different priorities, of course. And then more on the livelihood side, we have a global partnership with Technoserve, which is an enterprise and agricultural value chains development NGO. And again, we're working with them to start providing support through to the small businesses in our host communities, both those businesses on the program, but in South Africa, for example, there's quite a lot of assistance being put out there, both by government, but also by philanthropic organisations, including by people like the Oppenheimer family. And we're working with our suppliers and with host community businesses to access the funding that's available to them, which we think realistically they probably wouldn't know about absent absent our outreach to them. So again, I think the foundations that companies put in place in advance of these sorts of crises are the ones that are most likely to take you through effectively and most likely to give you a good chance of coming out. I think none of us expect to be better off coming out of this, but at least if we can keep the businesses in our host communities, keep them ticking over at least through the pandemic, and then at least they'll be well placed to respond once economies start to open up and people start to spend again.
Do you think that it has, by reacting so quickly, and do you think that it has helped strengthen your relationships with some of your partners, be it society, be it local government, be it federal government, be it NGOs?
Yes, I think that will be the case. I mean, we have to be conscious that there are also risks around mining operations. So movement of people is clearly a risk factor for transmission of COVID. So we've been very mindful of that. So there will be concerns out there in communities, but we're doing a lot of community education, both in terms of how communities should be responding to the epidemic themselves as individuals, but also about what we're doing and what support's available. So I think at the local level, we believe that will stand us in good stead. And then definitely at the government level, both at regional and national government level, we're seeing a very positive response. So for example, in some of the countries we're in, we're providing quite a significant chunk of the testing capability. We've been able to source that through our supply chain, and we obviously have a very sophisticated supply chain organisation that's been able to access equipment more quickly than some of our host governments can, and we can access the right personnel to operate that equipment as well, perhaps more quickly than some of our host governments too. So we do believe that there are some risks that we need to be careful to manage, but we think there is by demonstrating that we're there with host communities, taking them through the pandemic, helping them prepare to avoid infection, helping when infection strikes, we are hopeful that will build stronger relationships and allow us to have a better understanding of the places in which we operate as well.
Mm-hmm. Often we see a two-speed response depending on the size of the company. Jessica, do you think that some of the work that Anglo American is doing and ArcelorMittal are doing is fantastic, but they have the luxury of being a big, multinational business. Do you see for some of the smaller miners the response is so positive, and they're having a positive response and doing the right thing and are able to do the right thing?
That's a good question. I think part of it has to do with the size of the company. So of course, if you are a larger company, you also have shareholders and stakeholders that matter a lot more as well. So they are beholden to larger investors. They can make headlines. They can be, I don't want to say targets, but they can be made an example of in major media. And so of course you need to have that ability to respond in a big way. But the smaller companies as well, when we look at, if I put my investment hat on and we take a look at some of the smaller companies, one of the first questions we ask them is, do you have someone who is responsible for sustainability? And it doesn't have to be a global expert, and it doesn't have to be, their 100% full-time role. But we want to know that there's at least somebody there who can think about it, who has the ear of senior management, that can deal with this. And if they do, then that already puts them in a pretty good position. Now, in terms of how the smaller companies are responding through COVID, it is a little bit more difficult to say, particularly for the private ones. But in general, another thing I will say about the mining industry is that in order to receive permits and all sorts of things like that are absolutely necessary for operation, the mining sector has always been very good on the social side. So in the S part, right? Health and safety matters a lot. Community relations matter a lot. We've known that for a long time. And so the mining industry is actually pretty good at this already, not across the board, not 100% of companies, of course, we'll never get 100%, but in general, it's interesting that, a lot of people say we've moved from the E to the S. E is very, very big for extractive industries, but S is also important. And I think, as we go through this, we will actually realize as investors how good the mining sector is on the S side, because they've had to do it for so long. It's been so necessary for them. And it's actually a very, very good example, I think, for other industries going through this right now.
Let's sort of leave the COVID macro environment for a minute and let's focus on broader ESG and some of the corporate risks and some of the versus the investor demands that we're seeing. And let's talk a little bit about that. I'd like to turn to you, Kieran, just on future litigation risk, for example. So setting the scene, investors are putting pressure on companies to have a pathway to net zero, or certainly to low carbon transition. The companies, and John and Alan, will turn to you to hear exactly sort of what you're doing on scenario planning, and then obviously speak to you, Adam, on sort of, you know, what you're demanding. But to any, for any scenario planning, for any target, for any sort of real sort of strategic view about your business and what it may look like in 20, 30, 40 years time, arguably there's, you know, there could be some sort of litigation risk in the future. Are you having these discussions with your clients at the moment?
Well, I mean, litigation risk is always a big one in environmental issues, because you're always going to have some very sophisticated and some very well-funded environmental NGOs, for example, who are always quite keen to take on, especially sort of large mining companies, because they're seen as a very good and very productive target. The nature of the litigation risk will always depend on the nature of the legal obligations that a company has. So one of the first things that we would look to would be the legislation that applies to a company, and where do the legal obligations lie on a legislative basis. And I mean, one of the things I would say there is that we're seeing increasingly a move from soft law to hard law in this space. Only at the end of last month, for example, the EU came out and said that it was planning to legislate in 2021 for compulsory due diligence across a range of sectors. So there is another legislative obligation put on companies that can lead to legal risk. One of the things I would say about that type of legislative obligation, however, is that it might be less likely to lead to litigation where a claimant brings a claim against a company. What is more likely to lead to, in terms of legal risk, is action by a regulator. So I think we should never lose sight of the legal risk that arises from regulation by governments and by regulators, together with litigation risks from third parties. To be honest, I think the litigation risk from third parties in relation to things like net zero targets will lie more on governments than it will on companies, and that's simply because a lot of the binding obligations at the moment are placed on governments rather than companies themselves. It's going to be interesting to see, however, if we see NGOs or shareholders starting to take action against companies, and it's going to be interesting to see whether companies factor that litigation risk into their development of policies, for example. I know, for example, that there was a case in the States where a company was taken to court about pretty much over-promising in one of its public pronouncements, and the idea that this may have misled investors, for example. Now, that settled out of court and there was no decision made on the merits, but it's something important to bear in mind whenever companies are framing these sorts of policies.
That's a very good point. John, can we turn to you and just hear sort of your view on, you know, what is Anglo American doing regarding the scenario planning? Are you taking these changes and future changes of the regulators into account, and also what importance are you placing on communications in this regard?
You're talking specifically with respect to climate issues, Carol?
Oh, yes, sorry. The transition to low carbon economy, yes.
Yeah, I mean, Adam talked about this earlier about, you know, there's continuing announcements being made even during the pandemic. And, you know, we ourselves made announcements at our virtual annual general meeting last week. So we've committed to having carbon neutrality for scope 1 and 2 emissions by 2040, and to have 8 of our assets carbon neutral by 2030. And then on the scope 3 emissions, which is also obviously incredibly important, we announced that we will be divesting our thermal coal business in the next 2 to 3 years, if all goes according to plan as well. So, and we've already halved our output of thermal coal. So these issues, they are important. On scope 3 emissions, we have more work to do to understand what the opportunities for reduction there are. So clearly a lot of our products go into processes including steel making, and there we don't make steel ourselves, so we have limited control over that, but we are now starting to look at what partnerships we can have with customers and downstream sectors more broadly to try and look at the scope 3 carbon emissions from that. But certainly as far as scope 1 and 2 now, we have set ourselves a 2040 target to be carbon neutral on that front. And that, as I said, that was something we announced last week, which I think is indicative of the points already made about the pressure is not going away. We have additional pressures to cope with at the moment, but these underlying ESG pressures remain because the underlying logic behind them remains compelling. We have to get on top of carbon emissions as a society, and big companies need to play a leading role in that.
Okay, thank you. Adam, would you like to chip in here?
Yeah, absolutely. I mean, clearly this is a critical issue for investors, and engagement continues with companies, and welcome the further steps that Anglo have taken, and the Transition Pathway Initiative, which is a tool that investors use very widely now, and underpins a lot of the engagement, but also underpins an index for our passive funds. That initiative is really trying to decipher which companies are genuinely setting themselves on pathways to net zero, how they're doing it, how transparent their commitments are, and how do they compare to their peers. And we do need to compare across sectors, and it's difficult in the diversified mining sector because of the complexities of the different commodities that many of those companies have. But it's going to be a key feature of engagement now, and it'll be a key feature of the recovery as well. And I think we're entering a phase where companies that are very much putting forward those public strategies that investors can test, look at independently, and have confidence in are the ones that are putting themselves in conversations with investors around the transition in key pathways in key sectors. And I think we have a discussion with a steel roundtable led by investors in the next week, where we're looking at the whole value chain from purchasers of steel to steel manufacturers to the suppliers of energy into the steel sector. And can you start to knit together the partnerships there with investors supporting, be that through their holdings in companies or through creating of additional finance and incentives to enable those pathways to be established. Now, I think it's early days, but those companies that are setting out those sort of commitments, understanding the landscape of net zero, are the ones that are putting themselves proactively into those conversations. And we will increasingly differentiate between those companies that aren't doing that. And I think it really is, for me, part of the recovery, part of the opportunity to sort of play a much more sort of collaborative role in engagement and partnership with companies through those value chains. And I think you've got Anglo, you've got ArcelorMittal, those kind of companies are as part of the solution here. And I think investors need to engage with that in mind.
And Alan, can we turn to you?
Cheryl, sorry.
Oh, sorry.
Sorry,
Yeah,
Carol.
go ahead,
Can I just add to what Adam is saying? Because I think it's important that we recognize that ESG will be ongoing, because ESG is simply another framework for us to look at these companies and engage in the companies. We're very used to looking at financial statements, and I think it needs to be very, very clear that ESG is simply another framework for us to assess company performance. And at the end of the day, it does matter for the bottom line. As investors, that's what we recognize. You need a license to operate. I'm talking about the mining sector. You need health and safety, because that allows you to continue to operate. And as you pointed out, in future, if you can achieve these environmental targets, you are also avoiding litigation. You're avoiding potential fines that might be put on these companies in future. And so that's why I think it's so important for mining companies, large and small, to engage on ESG, not because it's some specialized way of looking at a company, because it matters so much for the underlying business as a whole. And that's the way that we look at ESG. It's not something separate that needs to be considered and gets a separate report done by a separate analyst. It needs to be part of the entire analysis and consideration for companies. And
if I could add as well, I mean, probably worth remembering that the transition to green economy, particularly low carbon energy, is going to be one of the biggest boosts to the mining sector in generations. I mean, the demand for metals that will be required for all the renewables technologies, all the low carbon technologies, you know, is going to be a significant boost for the diversified mining sector and for those companies specialized in those commodities as well. So we shouldn't overestimate the resistance of the mining industry, because actually it's a very big opportunity for us, and you're seeing the big mining companies shifting their capital allocation in light of those opportunities that are arising.
I'm going to come back to that in a second, John, because that's a really good point. I want to stick with the sort of the ESG framework, because I think, Jessica, you bring up a really good point. You know, as an investor, we're used to looking at, you know, the financial value that is created. I think now the world has moved beyond that, and it's not an either or, as Adam said. Looking at social value is just the opposite side of the same coin, I guess. So you've got social value and you've got financial value, but they have to be integrated. And it's up to the companies to explain to the investors how that is integrated, how they behave, and how they integrate that into their business. I guess what I'd like to touch on with all of you now is just, you know, how you do that as an investor. How do you engage with companies? How do you find out what companies are actually doing? There's a plethora of standards out there. There's a plethora of rating agencies out there. There's a lot of noise going out there in the marketplace about ESG that creates a big challenge for mining companies. Number one, to be able to report the metrics that are important to them and that actually define exactly what they're doing. And then there's also a real challenge from the investment community's point of view, because they're comparing apples and oranges, and find it quite difficult to navigate. Adam talked about the transition pathway initiative tool, you know, another very useful tool to use. But how do we? I'll start with the investment side. I'll start with you, Jessica, then turn to John and Alan. How do you navigate all of these different standards and rating agencies and tools?
I think it is difficult to measure it, because we want, as an investor, you want to be able to do this. You want to be able to quantify it, and I think that's the biggest challenge. And there are a lot of standards. At some point, I think we will settle on a standard. I don't know what it is, but I think we will get there at some point. There are some things, though, that can be measured, especially on the environmental side. Things like GHG emissions, water use. These things matter a lot, and they can be measured. And so I think, you know, how are you dealing with waste and tailings? I think there are some things that need to be disclosed. Just like financial statements, you can have different quality of disclosure. You can also have different quality of disclosure on these metrics as well. And so we just, as investors, we need to be demanding, and we need to engage, and we need to understand exactly what is being reported. I think on the social side, assessing it is a little bit trickier. You do have statistics on health and safety, for example, that you can measure, and I think that is important, and I think generally mining companies are very, very good at doing this as well. But, you know, I also think on the social side, assessing the company's performance is almost like assessing other qualitative issues, like corporate strategy. Is there a way to quantify that? Not really, but you have to assess it anyway. The quality of the management team and senior management, is there a way to quantify that? Not really, but it's something that needs to be done. And so, again, there are some things that can be quantified, some things that cannot, that need to be qualified, but is, you know, as an investor, you're used to having to do that anyway. And at some point there will be better standards, but you know, I think we need to continue to push for it and continue to measure it in the ways that we can. At some point, I think we will get to standards, but it's an evolution, but we will get there.
Good. Okay, we're running out of time, guys. So I'm going to sort of wrap up quite quickly, and I'm going to turn to you, Alan, and just picking up Jessica's point about, I guess, investability and engaging with investors. What do you think that mining companies need to do to be investable for generalists?
They need to obviously embrace these issues, that goes without saying. Then they need to be good at telling their story. I feel for this challenge about different standards, lots of metrics, lots of indices, because a lot of people are sort of looking for a single algorithm which can separate the good from the bad. It's not that simple. And so the storytelling is important. But then also the investors need to be receptive to hearing a story rather than just seeing what the algorithm says. So the better the quality of the dialogue rather than the algorithm, I think is really important. And we need to sort of concentrate on 2 or 3 of the indices or schemes which actually do a really thorough job. John and I are both involved in IRMA, which is Initiative for Responsible Mining Assurance, which is a very sophisticated model written by many different stakeholders, which has captured the qualitative and the quantitative aspects of mining very well. Mine sites can certify against them. Investors and customers can choose to favour mine sites which have got that standard. So there are 1 or 2 models out there which really work. Less is definitely more, but nothing beats a 2-way dialogue where you can really talk about the qualitative stuff. And rather than just focus on the quantitative stuff, because the quantitative stuff alone doesn't tell the story. It's sort of no story without numbers and no numbers without stories. We need to be good at handling both.
And
with
John,
that, sorry.
No, thank you. That's really helpful. I'm John, turning to you.
Now. Sorry
about equality dialogue. Sorry, Adam?
Sorry, I just had to announce Alan ducked off in case you wondered where he went. He has to go for another call. So he's signed out now.
Okay, great. So turning to you, John, just talking about equality dialogue, and you mentioned earlier the demand for metals. Metals are needed for this transition to a low carbon economy. Do you think that's where the story, the future mining story is?
Yeah, I mean, I think that's where a big chunk of our future demand will come from. And I agree with what Alan was saying about having to tell a broader story about ESG narratives. And I think it's also, we need to remember who we're talking to as well. So investors are clearly really critical. I think it's something like 1/3 of funds under management now have some sort of ESG screen, for example. So that's really significant in the capital markets. But we also have other constituencies. So, in our business, like every other business, we have to think about what customers want. So, and the IRMA initiative that Alan mentioned, for example, is really primed to focus on customer expectations who themselves are responding to broader societal expectations about how the products they consume and use are produced. And, mining is not unusual in that. You've seen that in textiles, agricultural commodities, for example. So, so I think that story is really important, and understanding who your stakeholders are, whether that's host communities or governments or customers or investors, and being able to talk to the things that matter to all of them, which brings us back to the whole ESG point, of course, which is that different things matter to different people. So you need to have responses to all of the issues that are material to your stakeholders, because in our sector, if they're material to your stakeholders, they'll become very material to you before too long.
Yeah, very good point. Adam, I'm going to turn to you for last word just on engagement. I mean, we're talking about having dialogue and understanding what matters to your stakeholders. You're one of the mining industry's biggest stakeholder.
Well, Look, I mean, I think we're entering a really exciting phase of partnership with those companies that are on trajectories that investors have been asking for in relation to climate change. But as John says, and Alan noted, that there's a whole raft of broader issues that we're also focused on, from health and safety, tailings dams management, etc. That we and on issues like tailings dam, we're still very much working on that issue, and hopefully we'll have a global standard shortly. But my sense is that companies that have the good governance, have the understanding in place, are the ones that position themselves for the next phase of engagement, which will be very creative and really knitting together through value chains partnerships. And I think investors will be looking to form those kind of sort of pathways and working with them, and doing so in a pretty creative way. So my sense is that it's key that the engagement continues on this sort of very individual company to investor, individual company to individual investor, and through initiatives like Climate Action 100, that'll be essential. But equally, that we're going to be looking at much broader kind of sort of value chain pieces coming forward. And I think companies like Anglo that have a sort of broader world view and understanding of their role in the world are companies that positions themselves both attractively from a perspective of us wanting to remain a shareholder in them, but also as a partner in sort of working for regulatory change and in driving net zero pathways and dealing with challenging issues like tailings dams.
Last word from you, Kieran.
Yes, I think engagement's pretty important. I would just highlight, of course, not that anyone's forgotten it, but the need for engagement right at the bottom as well, with the communities in which the mines are actually operating. I mean, for example, you know, Sustainalytics did a study in 2015, and between 2008 and 2012, only 30% of precious metal projects were delivered on time. And that was because 42% of those delays was community opposition. I mean, one of the constituents to whom companies should be talking the most is communities in which they operate, and that then has impacts further up the chain. That then will help with conversations with rating agencies, with investors, and with everyone else and with customers. But if you can get it right down at the foundational level in the communities in which you're operating, it does, you'll reap the rewards further on up the chain, I think.
Great, thank you. Thank you all to panel members. It's been a really, really interesting conversation and discussion, and I'm sure others will think so too. And we've covered a lot of ground here, but I think the bottom line is, you know, engagement and dialogue. And as Jessica said, there's no reason why any of us should treat ESG any differently to any financial decision that we make around our investments. So again, thank you to One to One for putting this all together, and thank you to our panel.